You are listening to chartingwealth.com for Thursday, the 10th of August, 2017. We see that the S&P 500 broke even for the day. The Qs, the NASDAQ 100 up 0.13%, 20-year bonds down about 0.5%, gold up 1.21%. And this is the second rendition of the program that I am doing. The first one, we didn't have the mic done right. And after about 13 minutes and being excited that we'd gotten it in the can, we learned the volume. The sound was horrible. So we're doing it again for you because we care. Now, let's jump into what's going on. This will be even better than the first one. What do we see happening? Well, it looks like the S&P 500 is starting to top out, perhaps. But again, we don't forecast. We're waiting for a trend to develop, and we don't have one. Broke even for the day. Looks like the PPO, the price percent oscillator, is trying to separate itself, but derivative oscillator still going up. We can't make a call. We have still a confirmed downtrend since we don't have a weekly vertical crossover yet. Market can go up over the next 2 days on Thursday and on Friday, change everything. Does look like the 2-day chart's getting closer and closer to crossing over, going down. We have a red spinning top, almost a doji, means lots of indecision. And as we look at our 4-hour chart, what do we see? Well, big down move in the morning, somewhat of a recovery in the afternoon. Remember, we use Heikin Ashi candlesticks, means average pace in Japanese. It is different from your average open, close, high, low. With your average candlestick, the average pace or Heikin Ashi candlestick, we find much easier to use, much easier to see the average pace, which is what we care about. Encourage you to go listen to that training, watch that training. It's probably the best training that we've done on the website, chartingwealth.com. Under trainings, look up Heikin Ashi. Now, what do we see going on? Well, in the morning, we had the crossover going down on the 4-hour chart. So again, we'll continue to watch, see if that down movement on the 4-hour chart is going to be enough to pull the 2-hour over to go in the same direction as the weekly chart. We'll continue to keep our eye on that, keep you updated just how things move along. What's going on the Qs? It was down 0.13%. The Qs not nearly as close as the S&P 500. Again, the Qs is the NASDAQ 100. The tech stocks, it's been sliding sideways since it topped out around the 21st of June. Really hadn't risen above that point at all, about 144. And again, it's right around 144 going on 4 weeks later. We see derivative oscillators continuing to lose downward momentum, but the PPO continues to head down. We look at the 2-hour chart. What do we see? The 2-day chart. What do we see going on there? We see a sideways slide. Hasn't crossed over yet, going down. Does look like it might be getting close to that. Derivative oscillators continuing to lose energy. As we look at that 4-hour chart, we can see that it crossed over going down in the morning with a big down move, recovered some in the afternoon to close above the 2-day trend line. So we'll continue to watch. We'll let you know. Right now, the schizophrenia between the down move on the weekly and the up move on the 2-day chart on both the S&P 500 and the NASDAQ 100, that is the QQQ, keeps us from having any trade. Again, we're following trends. We don't establish them. We don't make them. We don't forecast. We follow trends. The best way to chart the market, we think. Okay, TLT, the 20-year bond fund, what's it doing? Remember, the bonds are typically inversely related to the market. If the market starts heading down, you can expect bonds to head up. And the sideways slide we've seen for the last, since early to mid-July, is all about the market trying to figure out if it's topped off or not and what bonds are going to do. Bonds were up for the day 0.55%, still in a confirmed up move all the way back from the week ending February the 7th. And if we look at our 2-day chart, we see that it's trying to cross over going up. We'll just have to continue to watch and see if indeed that does occur, if indeed that Again, it could change a lot because it's not a strong crossing over yet. It could change a lot with the next couple of candles over the course of the day on Thursday. We'll continue, or over the course of the next day or two, we'll continue to watch that. Now let's look at what's going on the 4-hour. That's what I need to see. The 4-hour chart, of course, crossed over in the morning, then moved back down a little bit in the afternoon, but that is a confirmed crossover there. We'll see if that's going to be enough up movement to totally pull the 2-day chart over the next couple of days and make that the real thing. If indeed that is, we of course would wait for a backup on the 4-hour chart, and then once it turns the power on back in the direction of an up move, that would give us a decent entry point. So we'll continue to see how these markets play out. Okay, lastly, we'll go into gold, up the most for the day, 1.21%. And of course, what over the course of the past day was a weak crossover has turned into a strong one with that big up move in gold throughout the course of the day. Again, it's not a weekly vertical crossover confirmed yet. Why? Because the candle hasn't finished drawing. The candle won't finish drawing until Friday. And we're going to talk a little bit about that in the question and answer portion of the show at the end of this lesson. So what's going on with market review? That's when we'll have the lesson. What's going on with gold as far as the 2-day chart goes? It's ticked over, going up even stronger as the derivative oscillator's continuing to lose energy. Of course, we can see how gold had been sliding sideways, but it did have a strong up move on Wednesday. And as we look at the 4-hour chart, we see it trying to cross over, going up. So we'll continue to keep our eye on gold as things continue to move and we watch these markets potentially top out as far as the stocks go and move down, which should continue to increase the upward power of gold and, of course, bonds. Now, for those of you who just use the 4-hour chart to track gold, I encourage you to actually trade gold in your virtual trades. I encourage you to watch what happens in the morning. See if gold digests these gains and maybe moves down, or if this close to being a crossover on the 4-hour chart is sustained, and if indeed gold does move up strongly. If it does pass through there, you can sure look at it around 10:30 or noon when the next candle's drawn and see just what is going on and if you might have an entry point. Okay, now that's it for our review for the day. If you're interested in a little bit of training, stay with us. If you've just finished your daily market worksheet and you're ready to go, then go. Let's talk a little bit about candles so that you understand how to use them. Candles are only usable when that candle is complete in its drawing. 4-hour candles are, of course, the easiest because they're drawn every 4 hours, and at noon they finish drawing, and at 4 they finish drawing. So does that mean that at 4 o'clock you purchase something? No, that candle is not drawn until 4 p.m. So on a 4-hour chart, it's drawn at noon and it's drawn at 4. So don't get yourself confused as to when a candle's actually a candle. It's not a candle until it's completely drawn. And if you have some entry point that you think has identified itself for getting into a trade, such as in gold, and gold crosses over going down at 4 p.m., as it did on Wednesday, the 2nd of August, your entry point is not at 4 p.m. It's actually the next day. And there are potentially 2 times that you could enter. The standard way that we do it, the standard procedure, would be to enter at noon after the next candle is drawn, or you could even look at how the market is at 10:30. That's after idiot hour is over. We've talked about idiot hour a number of times. It's when the market maker has a lot of control on pricing and everything else, and we just don't get into the market when it opens at 9:30. We wait at least an hour. So you could look at where the market is around 10:30 when things have settled out and jump in, or you could wait until noon that following day, see how the candles are doing and jump in at that point. Either one of those jumping in points would have been a decent time to get in on this last crossover going down for a virtual trade on gold. Would have gotten you in somewhere around $120. And of course, gold dropped to as low as 119.27. Well, actually as low as 118.94. Then of course, gold turned around and boomed up on the 4-hour chart. Don't forget now, if you were jumping into a downward move in gold, you were going in the opposite of what was going on with the 2-day chart, but you were moving in line with the weekly chart at the time. So again, we can talk about when to enter, when we're talking about when to enter. We can also talk about when to exit and exiting strategies. And we'll talk about that on another broadcast. But understanding when these candlesticks are drawn. 2 more examples on the 2-day chart. 2-day chart, a candlestick actually ends at the end of the 2nd day. So when we look at the chart for the 2-day candle ending on Thursday, the 3rd of August, that candle ended at the close of the market on the 3rd. So it represents the movement on Wednesday the 2nd of August and Thursday the 3rd of August. That is what a 2-day candle represents. So a 2-day candle is not complete until that 2nd day ends. And when you look at our charts, you know when the 2nd day ended because it moved on from there. And when you go back in time and look, it always gives you the date that it ends, okay? Now, on the weekly chart, lastly, the weekly chart never ends until the close of the market on Friday. So again, every time you look at the date on a weekly chart, it gives you a Friday date. It encompasses all of the movement of that ETF or stock or whatever it might be, index, whatever it is you're looking at. It encompasses all of the movement throughout the course of an entire week. Gives you the high, low, open, and close. So again, that is not completed in its drawing, just like as we look at today at the close of the market on Wednesday, it's only the first 3 days of a 5-day candle. So you can't call gold as having a weekly vertical crossover. We saw last week it actually crossed over at the beginning of the week and then bled it out. So again, you don't have a candle. It's not drawn until that week is over on the weekly chart. Got to understand how these candles work so that you can use them properly. And again, the best training we have on our website, I think, is the Heiken Ashi candlesticks, which helps you understand the patterns and how they're drawn and how to use that average pace candlestick that's different from the standard Japanese candlestick. Thank you so much, folks. We always love to hear from you. Don't hesitate to write us, cw@chartingwealth.com. Please follow us on Facebook, Twitter, Instagram, YouTube. You want to really help us out with the metrics, subscribe to our podcast at iTunes and, of course, at YouTube. And, of course, if you want to receive all the bonuses and all the free stuff, you go to chartingwealth.com and you sign up for our daily market review. Totally free. Just put in your first name and your email address. We'll send it all to you. God bless. All the best from your friends here at chartingwealth.com.